Hello, everybody. Thank you for joining us today. My name is Melissa Tosetti, and this is...
I'm Kevin Gibbons.
And we are with The Savvy Life, and we have logged in a few minutes early prior to our normal start time just to give folks a chance to join us. And we call this our pre-show, where we spend just a couple of minutes talking about something interesting to us. And actually, I wanted to tell you about an article that I posted on our social media that got legs.
Okay.
I wish I could have said that I wrote the article, but it's something I actually came across about February timeframe, and it is this idea that as adults, time seems to move so quickly. Right?
Okay.
Excuse me. Time seems to move so quickly. So when you're a kid and you're in school, it just drags. It seems like that first 18 years is, a lifetime. Right. Yeah. Well, part of the reason is perception of time, and the fact that when you're a kid, so many of your experiences are brand new. And so you're taking in all the details and you're absorbing all the details, where as adults, so much of what we do is routine.
And so you kind of gloss over it and go on to the next thing, and so that's you're not taking the time to experience it, and it seems to pass quick.
Exactly. Yeah. Okay. So anyway, I posted the article on our social medias, and Mike Clausen, one of my favorite humans in this world, picked it up and ran with it. He is a guy that lives life, and he's very much into making sure that his family is just having these wonderful experiences, all financially responsible because he's a financial advisor. And it was just very interesting because he tagged me on his personal post, and just watching the interaction between his family and his friends regarding this. Now, on one hand, you had some of his friends who were like, yeah, this makes perfect sense. And then on the other side, it's like, no, my life's moving so forward. I can't even grasp this. And I was thinking about that particular person. And granted, I don't know the details of his particular life, but I got the impression there was like a lot of travel, business travel involved and stuff. And I was thinking that unfortunately with business travel, very often there isn't a lot of room to have new experiences.
Yeah.
You typically stay at the same hotel, the same hotel chain, right? Yeah. You try to fly the same flight so you can gain points, or the same airline.
Yeah. And you're hoping that it's boring and uneventful, because the last thing you want is excitement on your trip. You want to get to your destination and not have delays. Yeah.
So but there was another aspect of this article about mindfulness. And just that idea that helps to slow things down too. So when you are driving to work, instead of just kind of mentally checking out, giving yourself an opportunity to look at, oh, hey, I've never seen that donut shop before. This also reflects on an experience that I had last Friday, where I took some time off and had a brand new experience where me and Paul and Dante, we went and did airsoft, which was ridiculously fun, and it was a brand new experience. And I felt like I'd gone on a mini vacation. Okay. And just the correlation and the timing of that. And so my goal for myself, and I'm professing to everybody to hold me accountable for that, is to have new experiences. Yeah. I don't have to do a pay for play every time, like airsoft. It could be, I'm going on a hike this weekend, a 12-mile hike.
Wow.
Yeah. Okay. In a new park that I've never been to. Yeah. Just things like that, or cooking a dish that I've never cooked before. So I'm going to try to do that every week.
That'll be interesting. It's time to start our thing, but we'll pick this up in the second half of our presentation. But that also kind of goes in with the time and money session that we've been building, where we actually say the downtime, pick your downtime, make sure that it uses different parts of your brain than what you normally do. So it's kind of the same idea of just having those new experiences to change the way that you're thinking about things. And I didn't think about it in terms of actually looking at how you might perceive time too. Yeah. Interesting.
Yeah, it was probably, in retrospect, something that I shouldn't have thought to talk about a few minutes before today's session, and we probably could have built an entire session around it. So if you want to hear more about this topic, let us know. In the meantime, we are going to officially start our session. So again, if you're just joining us, my name is Melissa Tosetti, and this is...
I'm Kevin Gibbons.
We are with The Savvy Life, and what The Savvy Life is it's the name of our business, but it is this idea of creating a strong financial foundation while enjoying the journey, and doing that simply by being very purposeful with where you spend your time and where you spend your money. And the topic that we have for you today is talking about technology and banking, and how it has actually done so much more harm in our financial lives than it has done to help us. I feel very emphatic about that. Now, there's a lot of things about banking and technology that I really love, but it has really created a lot of chaos and complications in our financial lives. And so that's what we're going to be talking about today.
Great.
Yeah. So you want to jump in on that, or you want me to go ahead and keep going?
I do want to say one thing that I'll have to add this in for when we record this video and post it. I just read an article today on pretty much the history of banking. And it's I thought it was really fascinating because this one was specifically about how credit card companies are making obscene amounts of profits and how they're doing that, and that's a whole different conversation. But the article goes through and it really talks about how banking evolved, especially in the United States, and how it really works. And so I've been doing this for quite a number of years. I've been interested in money. I've been interested in systems. I think of myself as a fairly well-read guy. This was a fascinating article.
Really?
I learned so much about how the bank, just fundamentally how money moves in our society.
Yeah.
It was really fascinating.
I'd love to. We'll link.
We'll put a link to the article.
Yeah, I'd love to read it. It'll probably make me angry or want it.
No, because it's all stuff that we know.
Oh, okay. All right.
It's just
the details.
It's the details of how banking works. The takeaway, without getting too much into detail, is most credit card companies don't make their money off the interest they charge you or the late fees. They make all their money off of those small 1 to 3% transaction fees that they charge the merchants. And the article was that there's absolutely no reason for those to be that high.
Yeah. The
reason they are is because federal law capped fees on debit cards, but it does not cap fees on credit cards. And that's why some shops will say, do you mind if I run this as a debit? Because it's a much lower fee for them.
Yeah.
So that's just the article. But the history that they talk about how money moves between institutions and how that all got codified, really I thought was fascinating.
So that's from the banker's perspective. From a personal perspective and the way that we perceive it, what has happened is that let's just say, and don't, I want to be careful in my timing. So if I'm throwing out decades, I might be off a decade as to when this technology actually hit. Part of that reason is because that it hits in different time frames. Like the technology's there, but we're feeling it 5 years later. That being said, we started out where you might have a checking account and you'd write checks out of it. You might be able to pull cash, but it was one pool of money that everything came from, right? And then let's just say you had a credit card. So you would go and you would swipe your card. And you had full control of, because you were pushing those exchanges, right? You would buy that item, and that would be a push of a purchase, okay? So you know when things are hitting, and you're aware of them. Then what started to happen is that we started being able to have automatic withdrawals. So now you have hands in your checking account pulling money out. It's not a push. It's not a decision that you're making. It is whether you. I don't want to say whether you want to or not.
Yeah, you wanted to at one point, but you may not remember now.
Right, yes.
You may not remember. Yes. I think that's the key.
And unfortunately, and this is the thing that's so frustrating, because so much of all of this, and the answer to all this is to simplify things, but unfortunately for so many things, they make it more complicated, and each individual merchant makes it more complicated. And so you get to a point where we'll get into, when we're working with a client to create a spending plan to help them streamline their spending, and we'll just see it's chaos. Yeah. There's money coming in, coming out, and it's no wonder they're struggling. Yeah. You know, I don't want to say it's not our fault, but there are reasons why we're struggling that are outside of our, I think, perception. Yeah.
For instance, wouldn't it be easy if all of your automatic, well, it depends on how you set your money up, but for me, it would be very easy if all of my automatic withdrawals happened on the same day, or the same 2 days. So I could do half in the first half of the month, other than the second half of the month. And I would know that on the 10th, all this money is going to come out of my checking account, and all I have to do is worry about that. But of course, that doesn't happen.
Right.
You have one vendor that takes money out on the 5th, one takes it out on the 7th, one takes it out on the second Tuesday of the month, so it always changes dates, you know, and so you never know when the money is coming in or out. Now, that's not true. You do know you could have a list. You signed up for it. But it isn't easy for you to remember and keep track of. You need to have a spreadsheet. You need to have something set up to remind you, and that makes things more complicated. It's not intuitive.
And heaven forbid you are on a pay period or a pay scale where you get paid every other Friday or every other Tuesday. So it's not like you're getting paid on the 5th and the 25th, right? And so now your pay is a moving target. So these are all the problems that we've helped clients with, over the years. And it's complications that there are solutions to, but this is one of the reasons why folks are struggling. So then on top of all of that, now you've got PayPal, you've got Venmo, which is another pull. You've got Amazon, and the way that Amazon works, it is complicated. So how do you fix it? Because I could go for like another half hour on talking about all the.
I will bring up one thing about Amazon that is an annoyance to me, but I know that both you and your husband Paul have gotten very annoyed by it. It's the fact that if you order something from Amazon, they don't take the money from you until they ship it. Now, on one hand, that's good, that's responsible. But on the other hand, if I buy something, if I pre-order a book, and that book isn't published for 3 or 4 months, but I see it come up there, it's my favorite author, so I say, oh yeah, I want to make sure I get that. 3 months go by, and then suddenly there's a debit on my account. So what the heck was that? It's like, yeah, it was a book I ordered 3 months ago. Well, okay, yes, I should be responsible. I should remember those things, but it makes it harder to keep track of all that stuff.
Yeah, very much so.
Yeah. So anyway, like you said, we could rant and rave.
Oh yes. I'd actually be happy to jump on this desk right now, and you can just turn the camera. So that being said, how do you get out of that chaos? So part of it, and it takes time, is to start to untangle things, to start to simplify things. So one example is going to be, let's just say that you're using, let's just say you've got multiple credit cards that you use, okay? So the first thing is to start to simplify that, if at all possible. And I'm actually a fan of having at least 2 active credit cards because business travel, you never know if, I'm in Kansas and my credit card company's like, oh, we're shutting it down. It must obviously be.
Yeah, you want to have options.
Yeah, you want to have those options. So that's one thing, but you might want to choose that. Let's just say that when you're going to use one credit card for your actual purchases that you're making a decision to make, okay? And then the other credit card that you're going to use, and maybe that's solely for things that are automatically added to your, on a monthly basis, right? So it's let's say it's car insurance or whatever that might be. And that's actually a tip I learned from a client just recently. I didn't even really think about compartmentalizing like that. But the idea is that those purchases that are being made cyclically, you're aware of that exact number and what that looks like, and you can go ahead and plan that you're going to, above and beyond, if there's any balance on there, you're going to go ahead and pay that, so it's not continuing to build. Or even better, if there's no balance on there and it's only those purchases, then you're going to zero balance every single time, and you know exactly how much you need to put to that card. Well, now you can just really focus on, okay, it's only this other card, this is the one that I'm using, and I'm going to be more mindful of it.
So I agree with what you're saying.
Yeah.
I think the key is to systematize how you spend money. And for using the credit cards, you gave one solution, and that's actually one similar to one that I use. But the idea is figure out whatever works for you and just say, here are the credit cards that I have. Credit card 1 is for this, credit card 2 is for that, credit card 3 is for this, so that you have a better idea that when you get the bill, you're not surprised, because you know here are the types of charges that should be on here. However you set it up, whatever makes sense to you, you now have a system so it's understandable and you can keep things separate and monitor it properly, rather than just having a mix of, oh, I've got three credit cards, and whichever one I pull out of the top of my wallet, it's all muddled together. When you get the bill, you're looking at it going, well, what the heck did I do? So whatever you have, make a system. The one you described is a fairly common one, and that's a really good one.
Yeah, you're compartmentalizing your currency.
Yep.
Okay.
Yep.
The other thing I like about it is that, okay, so now I can just look at that one card. If all of a sudden I have this balance, it's like, whoa, what happened? It's so much easier for me to look through line by line, and I'm not having to take into account these occurrences that happen every single month. I'm a huge fan of making things simple, because I love what I do. I love talking about money, but I do not want to be sitting in here and trying to figure out what's what for my personal finances, let alone businesses or anything else like that.
Everybody who likes doing these things and likes spending and saving money and playing this game, I say playing this game because to some people it is, but everybody who does that, even those who enjoy it, very few people really get a lot of satisfaction out of ledger reconciliation, actually balancing the books. That's, even the people who enjoy doing this, that's not really where the pleasure comes from. So if we can simplify that and make that easier, so much the better.
One of the things that we have actually been doing a little bit more, and I've been doing it for myself for years and years, is so you have your spending plan, which is your budget, right? So that's key. That's tool number one, because you need to have an idea overall of where you want your money to go over the course of the year, the month and the year. But another tool that you can use if you do find yourself getting tripped up by like when certain things are hitting is to basically create a plan or a schedule, if you will, of here are all my bills. Here is, I know that I want to spend this amount on groceries every single month. So maybe what I'm going to do is I'm going to write down the date of when each of those bills hit, right? We just did this. We're working on it. You're doing it for a client right now. So basically, it breaks that spending down to a monthly level, or if you will, almost a weekly level. And so at any given time, first thing in the morning is I'm going in and I'm just checking, okay, what's hit, what hasn't. I know exactly what hasn't hit yet, and I can tell whether or not I've got some wiggle room in my spending plan for that particular week, or I don't. It is another step, but it is one of those tools to me that is priceless, and we might need to start preaching about that and talking about that more.
I think that's a really good one to address this issue, because for most of us, our spending is pretty much the same month to month. We have these bills that are due on these days of the month. You go shopping for groceries, you fill your car with gas. All those things are fairly standardized. And even if they don't hit on a specific date, you can still kind of say, okay, it's going to be in this time period. Getting those listed, making them match up with when you get paid, and making sure that things flow properly, that can be really key, and it can save a lot of grief. So that is one good tool. I think that some of the other things that you see with a lot of the issues of the banking and technology, and we've talked about this before, is just how darn easy it is to spend money.
I wanted to make sure that we brought that up.
I mean, that is one of the things. You wrote a really good article, Swipe, Go, Not No, which is just the idea about taking your plastic, either debit or credit card, swiping it through the card reader at the store, and then you walk out the store and you have no idea how much you spent, or maybe even what you bought.
You were on autopilot. During that particular stage.
And it is so easy. You laugh about the fact that you can buy coffee on a cell phone.
I don't laugh, but kind of baffled by it.
So those are touted as conveniences, and on one hand they are, but on the other, they're also somewhat devious, diabolical plots to make it easier to separate you from your money.
They're distancing us. Yeah.
And so, it's nice that it's easy. We don't have to go to the bank and get cash to go buy our coffee. Remember the good old days before ATMs? You actually had to stand in line at a physical bank during business hours, write a check or fill out a withdrawal slip, get cash from the teller, actually interact with people, and then go and spend your money. Whereas now you can just wave something. You can pre-order at a coffee stop, pay with on your cell phone, walk in, go over and pick it up and walk out, and not have to talk to anybody. But it makes it very easy, but it also makes it easier for you to spend money without being aware of it.
As we were getting ready for this particular presentation, and I'm getting ready to write a very, very in-depth article about it, or I am in the process of writing that article. So it had been a while since I had done the research and had statistics on just how much more we tend to spend if we're using a credit card. And so the last statistics that I had is that we tend to spend about 20 to 25% more when we're swiping a card.
As opposed to paying with cash.
Paying with cash or using a debit card.
Oh, okay.
Right? So this is for a credit card. The statistics now actually jumped up. It's 83%.
More?
We spend 83% more when we're using a credit card on average than we would if we were using a debit card. Wow. It is adding another appetizer to the meal. It is leaving a bigger tip. It is, signing up for one more thing while you're on vacation. There's something about the mentality of the credit card, and I've done it. I've absolutely done it, where or there's a buffer. It feels like, and we have to get on the other side of that, because it's damaging, and it does put us into that retroactive living that we talked about a couple of weeks ago, where we're constantly paying for past pleasures. And instead of like flipping that and anticipating, you know, pleasures that are coming. So think about that. And if that resonates with you, I don't know if you want to stick a Post-it note in your wallet or do something just to create that awareness. Many of you are aware that I feel like the term mindful and mindfulness is such an overused and misused term in our society, but it really is. It's that purposefulness, and it's just waking up and becoming aware. This is what we need to do.
So I agree with that. I think one thing that we do want to clarify is we're not saying don't use modern technology, don't use credit cards, don't use your cell phone to pay for
don't
coffee.
Go and get a horse and buggy.
We're not saying that. All we're saying is that you should treat those more convenient methods of payment with as much discretion and value as you treat pulling $1 or a $20 bill out of your wallet. It is still your money, and no matter how you give it to somebody for services, once you do that, it's no longer yours. So think carefully, be mindful, be purposeful, and use that same level of purposefulness regardless of the tool.
Yeah. Whatever currency you're using, ultimately that's going to come out of your checking account. And I think that we do forget that, and especially because it's those lump sums that are going to those payments on the credit cards. So yeah, I would love your thoughts on this. So if you are watching us, we're live right now, but if you are watching us on YouTube on the recording, love your thoughts and your comments on this particular topic. As you can tell, it's one that we're pretty passionate about. Yeah.